welcome to the Asian Tigers. I'm Shereen Bhan and we're in conversation with Ajay Kapur. Ajay, I appreciate you joining us here on CNBC TV 18. Let me start by asking you about the view on India at this point in time. And the camps seem to be divided, that India is caught between hope and reality. While the government has made efforts to sort of speed up the reform process, the economy continues to be sluggish. The recovery in the cyclicals hasn't exactly taken place at this point in time. How do you view India today?
Well, I've been overweight in India since September of 2013, when my old classmate and friend Raghu took over the central bank. And, I think India has a lot going for it. One is, I think the quality of leadership is excellent between Prime Minister Modi and Raghu. Number two, I think India is at a cyclical low. It's seeing trough earnings, I'd say trough ROEs, trough EBIT margins. And so you just need to be a little patient for these things to begin to move up.
Are you surprised by the degree of impatience? I mean, it's been 12 months that this government has been in office.
Yeah.
And yes, expectations did run ahead of reality and fundamentals. But at this point in time, questions on whether enough has been done, whether they could have, do more as far as reforms are concerned, and whether capital is actually going to go looking for the other hot emerging market. Are you surprised by the degree of impatience?
No, I'm not. We guys in finance are pretty impatient people. It's just the way we are. It's just the nature of the beast. So I think you've got to give this government and the central bank governor a lot more time because, as you know, it's a federal structure and it's not easy to get policy making down to the state level. You need the cooperation of the states. And I think it's very early days. So I was reading something in The Economist over the weekend where some guys at Harvard have this thing called the economic complexity score.
Right.
And what it means is that they look at your export basket and see how diverse it is. And that's apparently a very good predictor of economic growth. I think it's pretty creative. And India comes out number one with a projection of growth for the next few years of about 7 to 8%, which is the highest in the emerging world. So I think that India has a lot going for it. And so I am structurally bullish. And I think this recent correction is a pretty good excuse to add more.
What would you attribute the recent correction to? Some say that, money is being taken out to put into markets like China, for instance, or other emerging markets where now people are suddenly overweight. Or it could be just a factor of what's happening domestically because of the sort of lack of enthusiasm with what the government has been able to push through as far as policy is concerned. Add to that the vexed issue of taxation related to MAT and FIIs. What would you attribute the current correction to?
I think it's all of the above. Our clients are very overweight in India and they were quite underweight in China. And in fact, in China, they were overweight the sort of wrong stocks, mainly in technology. And this has been really a very financials-driven rally in China. And so they very quickly had to take profits where they had some, which was India, and then chase China. And that's been going on for the last, I'd say, 2 months. And so now the gap between Indian equities, which are down about 10, and Chinese equities, which are up about 30, is about 40%. And so to me, this is a pretty good time to actually do the reverse. Which
is move money back into India.
Yeah.
So what is looking good to you at this point in time as far as India is concerned? Which sectors do you believe look vulnerable? Which are the sectors that you believe we could perhaps see significant upside from these levels?
Our analysts like the banking sector. We also like autos. I also like the, not the home building sector, but anything to do with construction and dwellings. So India is going to add about 200 million people to the workforce by 2030. That's the entire population of Brazil.
Yeah.
And so these guys are going to need homes to live in. So they'll need air conditioners, they'll need lifts and elevators, they'll need ceiling fans, they'll need furniture. So I think that sector to me looks very attractive.
Valuations a cause for concern across any of these sectors, specifically, I would imagine, private sector financials?
Yeah, those valuations have looked expensive. But I remember in 1998, someone told me the same thing, that they look very expensive. So they just tend to look expensive because they're high ROE companies.
But would you look at the public sector banks at all? Or that's
it really depends on your risk appetite. So if you have a huge risk appetite and you think they might be, recapitalized or they might be, I guess, given some sort of reform-oriented managers, whether they could probably lower their NPLs in case the infrastructure sector begins to do well. So there's a lot of ifs and buts for that sector.
Yeah,
it really depends on your risk appetite.
You know, talking of ifs and buts, one of the big ifs is how the monsoon is going to play out for India, what that's going to mean as far as rural consumption is concerned, and how that then translates into, sectors like auto and the revival as far as the auto sector is concerned. What would you consider the #1 risk for Indian equities today?
I think the risk is that the earnings numbers just don't kick in. So I don't worry about the monsoons because who knows.
Yeah.
But the earnings numbers at some point will need to bottom out. And so the last earnings season was not good.
This one hasn't been particularly better either.
Right. So at some point, the market will need to see a trough, an actual pickup in the earnings numbers. I think that really is the biggest risk.
Do you believe it's troughed out as far as earnings are concerned?
Yeah, you can never really pinpoint the quarter, but I think we're near the trough. Yeah, we're who knows what the exact trough is. I'm not that smart, but I think we're probably at the lows.
And in terms of a recovery as far as the capex cycle is concerned, the cyclical recovery, do you anticipate the second half of the year is when we will probably start to see that kick in, because it's been slower than what most people had anticipated?
Yeah, again, I don't know. I think we are in for a 5-year capex cycle, and I don't know which quarter is going to be the low. I think obviously business confidence, especially in the private sector, will need to pick up. And we had
Are you seeing signs of that when you talk to people?
We're not. So I was just going to say that in March we had our India conference, and while I guess the politicians, the bureaucrats are talking a pretty powerful, positive game, when we actually talked to the companies, they were suggesting that things on the ground hadn't really changed, they hadn't really seen any pickup, and that their confidence was not that high, that they were looking for more policies to actually be put in place. And so it really isn't a shock or a surprise that the private sector hasn't really put its cash flow to work in terms of capex. But
how much of that is also a problem related to just leveraged balance sheets at this point in time, especially as far as the infrastructure side is concerned?
Yes, you're absolutely right. The infrastructure companies, just a handful of them account for most of the leverage in the system. And I don't know how that's going to be fixed. I really don't know. But I think apart from those infrastructure companies, the Indian corporate sector has very powerful, positive free cash flow balance sheets. So it really is a handful of, I'd say, about 12 companies that constitute the bulk of that debt. And it's really up to them to figure out, how they're going to solve that. And I think just getting their projects off the ground and started, which will get them some cash flow, I think will begin to heal things.
Okay, so slower than anticipated recovery in corporate earnings is a key risk. What are the other headwinds that you foresee for the markets in the short term?
Well, I think if oil prices begin to go up again, as they've rebounded quite strongly, so if that continues, if oil prices get even stronger, I think that will be a bit of a headwind. I think that the Fed begins to raise by the end of this year and continues to raise. It's not a shallow raise, but a steep raise. That probably will be an issue for emerging markets. I think if the dollar gets a lot stronger, that's always an issue for emerging markets. So those are the kind of risks that we worry about.
In terms of the Fed action, September or December, when do you see the Fed taking off?
I have no idea. This changes every day, so it's pretty neurotic. It's like watching a tennis match, and you go like that. So
okay, whether it's September or December, the impact on emerging market flows and the impact on just how sharp we are likely to see outflows.
Well, I think if it's just a 25-week high, this is, what Governor
Priced in, discounted.
The market is looking for a 25-week hike by the end of the year, and even after that, the trajectory is very shallow. And I don't think that is such a big deal. What worries me is that where the Fed's mindset is way higher in the market. And so the Fed actually does what it says it might do. I think the market will be surprised because there's a massive gap between those two expectations.
And do you believe that India could be less vulnerable in the emerging market basket, even if the Fed were to translate into reality its thoughts at this point in time?
I'd say yes, because I think the Indian current account deficit is not really a big deal. Indian remittances are very strong. Indian FDI potential prospects are very strong. I think India needs to be a little bit careful about randomly taxing foreign companies.
How much of a worry is that? I mean, when you talk to people today, is this the #1 deterrent from putting fresh money, for instance, into India?
No, it's not the #1 deterrent, but it just creates a pattern of randomness. It's an oxymoron, but it just seems to come from nowhere. And it is the law of the land, so it's not, exactly, shouldn't have been a surprise. But people do tend to get surprised, and I just think it's unnecessary.
The surprises are necessary, or the acting on surprises are necessary on the part of FIIs and FPIs?
Well, obviously the government has to prosecute the law of the land. There's no doubt about it. But it just comes out, it seems to come out of nowhere. And I think because no one really was talking about this, it was an interpretation that was pursued and is being pursued, and I think that's what creates the uncertainty. So I think this is one of the features of India, that it tends to sometimes just negatively surprise investors.